Hi guys, I'm Taylor Nippon, the controller for Excelsior Capital, here to discuss some ways accounting is different in the commercial real estate sector from other industries. Some aspects to highlight include reviewing tenant leases, annual CAN reconciliations, reporting requirements, and communicating that financial information to the owners. Tenant leases are typically the most important piece of the accounting process since all income stems from this. So this is a great starting point. When entering into a new lease contract with a tenant, your accounting team will need to know the following: any concessions being provided by the leasing team, such as free rent or tenant improvement packages, monthly rent amounts, and any annual rent increases, security deposit amounts to be held separately, not reported as income, and common area maintenance reimbursements from the tenant to the landlord. These expenses are typically items like property taxes, HOA dues, general repair costs, and so forth. This is calculated by pro rata share of each tenant to the expense total on an annual basis. Up next are reporting requirements that the accounting team must be aware of. These come from the federal and state government levels, lender requirements, and the ownership team's internal requirements. Some examples of this are annual tax returns for the property to the federal government, monthly sales tax reporting to the state governments, and quarterly financials that are sent to the lenders. In addition to quarterly financials, some lenders reserve funds for items like real estate taxes, insurance, and tenant improvement packages. To access those funds when you need them, it's important for the accounting team to send the proper documents to the lenders and request the funds to be used and paid before those items are due. Monthly financial tasks and annual reporting tasks are different. And when reporting to the ownership team, typically this is something that they choose on the timing of each report, and it's done in the form of a monthly financial package. At Excelsior, we prefer to have monthly reporting, and we upload these to our investor portal and communicate this to the investors so everyone is well informed. Reports you would expect to see include balance sheets to show assets, liabilities, and equity, profit and loss statements to show income and expenses, accounts receivable statements to show which tenants are behind on their rent and by how many days, bank reconciliations to verify all the cash is accounted for if using the accrual method, along with the bank statements. Rent rolls are also included to stay on top of vacancies and see leases that may be expiring soon. Accounts payable reports will be included to review any outstanding payments to vendors, like contractors, and management fee reconciliation reports. Typically, property managers take a fee for their services provided, like the leasing, property management, and accounting teams. These fees should be calculated, and a report will be provided to justify those expenses. While this is not an exhaustive list of all the functions that property accountants take care of, it's a good starting point for investors to get a sense of what goes on behind the scenes and what to keep an eye out for when investing in commercial real estate. Feel free to visit our website at excelsiorgp.com and reach out with any questions.